This is a demonstration of problem 22-2B, change in estimate and error correction. Bishop Way Company is in the process of preparing its financial statements for 2020. Assume that no entries for depreciation have been recorded in 2020. The following information related to depreciation of fixed assets is provided to you. In the instructions in Part A, it states to prepare the journal entries to record the depreciation expense for 2020 and correct any errors made to date related to the information provided, and in Part B to show comparative net income for 2019 and 2020. Income before depreciation expense was $420,000 in 2020 and was $386,000 in 2019. So we will be making those entries for depreciation expense and also showing the comparative income statements, but we're first going to calculate the amounts for the depreciation expense in each of the three scenarios. So the first scenario states that Bishop Way purchased equipment on January 2nd, 2016 for $142,000. At that time, the equipment had a useful life of 8 years with a $6,000 salvage value. The equipment is depreciated on a straight line basis. On January 2nd, 2020, as a result of additional information, the company determined that the equipment has a remaining useful life of 6 years with a $2,000 salvage value. So we're going to compute first. We have to determine what the book value is on the equipment at the date of the change. So originally the equipment cost $142,000 and it had a salvage value of $6,000. So the depreciable cost was $136,000 and it was being depreciated over 8 years. So the depreciation at that time was $17,000 and we had depreciated it for 4 years. So the total accumulated depreciation from 16 to 19 was $68,000. When we subtract that from the original cost, we get a book value or depreciable cost at the end of 19 of $74,000. This is where we are at the point of making the change, where the company now states that the equipment has a remaining useful life of 6 years and a $2,000 salvage value. So we pick up with the book value, subtract the new salvage value, which gives us a depreciable cost of $72,000, and we divide that by the remaining useful years of 6, and we get a new depreciation amount for the equipment of $12,000. In the second scenario, it states that Bishop Way changed from the double declining balance method for its warehouse to the straight line method. The building originally cost $620,000. It had a useful life of 20 years and a salvage value of $20,000. And the following computations present depreciation on both bases for 18 and 19. So the problem gives us the straight line and double declining balance depreciation for both of those years. So we will look at how we were calculating the depreciation using the double declining balance. The original cost of the warehouse was $620,000. When you use the double declining balance method, you do not subtract the salvage value. You just don't depreciate below that. So you multiply the original cost in each of the years by 2 times the straight line rate. So to determine that, you take 1 divided by the number of years of useful life, which is 20, and we would get the straight line rate, which is 5%, multiply that by 2, and the double declining rate is 10%. So each year we would have multiplied 10% by the declining balance. So in the first year, the depreciation in 18 would have been $62,000, and the second year it would have been $55,800, and the problem gave us that. So at the end of 19, the book value would have been $620,000 minus the total of the previous 2 years, or $117,800. So now we have a new amount of $502,200, and now we're going to use the straight line method. So straight line does require that we subtract the salvage value, which is still $20,000, and that will give us a depreciable cost of $482,200, which we will divide by the remaining years of useful life. So the equipment had a 20-year useful life, and we've already depreciated it for 2 years. So we take the $482,200 and we divide that by 18, and we get a new depreciation amount under straight line of $26,789. The third scenario states that Bishop Way purchased a machine on July 1st, 2018 at a cost of $72,000. The machine has a salvage value of $9,000 and a useful life of 6 years. Bishop Way's bookkeeper recorded straight line depreciation in 2018 and 2019, but failed to consider the salvage value. So this is actually an error that was made. The cost of the equipment was $72,000. The bookkeeper did not subtract the salvage value of $9,000, so it was being depreciated for a half a year the first year at $6,000. The amount that should have been depreciated that year would have been $72,000 minus the $9,000 salvage value, or for one half of the year, $5,250. This continued on in 2019, and the bookkeeper depreciated the equipment at $12,000 when it should have been depreciated at $10,500. So this was a full year. So this is going to require us to make an entry to correct the retained earnings and accumulated depreciation for the error. So we will determine that amount by first looking at the amount of depreciation taken in 18, which was $6,000, when only $5,250 should have been taken. And in 19, $12,000 was taken when only $10,500 should have been taken. So we're going to have to make a correcting entry for the $2,250 of excess depreciation that was taken because the salvage value was not deducted. So those are the calculations for the depreciation for the 3 scenarios. Number 3 is an error correction. Number 2 is just a change in method, which would be a change in estimate. And the first one is also just a change in estimate. So we can now record our journal entries for the depreciation expense. For the depreciation expense for the equipment, we calculated that the amount for the equipment under the new remaining useful life and salvage value is $12,000 a year. So we would debit the depreciation expense equipment and credit accumulated depreciation equipment for that amount. For the building, under the straight line method, we calculated the depreciation expense at $26,789. So we would credit depreciation expense building and accumulated depreciation building for that amount. The third scenario required us to make a correcting entry because the depreciation had been calculated incorrectly. So we know that the bookkeeper had over depreciated the equipment, so we would need to debit accumulated depreciation machinery for $2,250, and we would need to credit retained earnings for the same amount, and that would correct those for the error. And then we do need to record the depreciation expense on the machinery for the current year, so we would debit depreciation expense machinery for $10,500 and credit accumulated depreciation for the same amount. So that was the A portion of the problem. And now we're going to do the B portion, which is to show the comparative net income, starting with income before depreciation expense. For both of the years, 2020 was $420,000 and 2019 was $386,000. So for the equipment, that was a change in estimate. So when there is a change in estimate, we are not required to use any type of prior period adjustment. We just show for 2020 the depreciation expense calculated based on the new useful life and salvage value, but we leave the amount that was calculated for 2019 as it was originally reported. The same is true for the change in principal for the building from double declining balance to straight line. We consider that as a change in principal effected as a change in estimate. So this year we would record the straight line amount of $26,789, but we would not change the amount that had been reported under the double declining balance in 2019, which was $55,800. For the machinery, though, that was actually an error. So when we have an error in depreciation expense, that is considered to be a prior period adjustment. So we would report the correct amount of depreciation expense for 2020, and we would also retrospectively or report the correct amount that should have been reported for 2019. So the spreadsheet has been calculating these amounts, and we have the income before depreciation expenses it was on this year, and then the prior year, and the new amounts, and we have net income for each of the 2 years as shown or as corrected. And that is the conclusion of the demonstration for problem 22 2B.